Tom, I'm not. We are not having those conversations, and maybe they're talking to somebody else. So I don't want to suggest that we have perfect information, but our broad-based client relationships we've had very little interconnectivity on the conversation on crypto, other than a fascination. I could tell you, it is the amount of conversations we're having on climate risk and how they should navigate portfolios is a major component of the conversation. The conversations about our deficits and the conversations we're now having on inflation risk is far more dominant with our clients worldwide than the whole conversation about crypto. But if you're asking me specifically about long-term investing from sovereign wealth funds, from pension funds, from retirement services, from big family offices, the conversation about crypto is a very minor conversation compared to so many other conversations.
In the relationship we have with Cowen, we have a bit of a bundled offering where they can take this to their clients. And frankly, Cowen's going to be the first investment bank in the industry going to market with a bundled approach for trading, whether it's spot trading or derivatives or swap trading, custody through us. They're building out their prime brokerage offering, their capital introduction offering, their research offering. So they're really looking at it holistically of how can they bring to market a very comprehensive digital asset strategy that's really replatforming their global markets business that Dan Charney runs and having a digital component to that. And that's really, really exciting. And frankly, it's groundbreaking. There's no other bank in the industry that's doing that as front-footed as Cowen is.
Do as I say, not as I do. What's up, savages? Welcome back, and time is money, so be sure to put this video on 2x speed. We've got a lot to cover today. Excuse the dog in the corner, he's not going to move. I've recently moved his bed in here, so let that not distract you as we jump in today to understand why standard custody, Cowen and Polysign are going to bring institutional money into this space. So let's begin. So a couple of things to cover straight away. I, for one, when standard custody came about, it felt like they'd been here for years and decades. And of course, the discussions of Arthur Brito, Polysign, Cowen, and all this news kind of got really messy for me. So I really wanted to just break it down, strip it back to basics. That's what we do best here on the channel, and figure out exactly what's going on. So first and foremost, standard custody. Who are they? Well, they are the institutional grade digital asset custodian. They're unlocking the value of digital assets for the institutional investor. To put it quite simply, for us to really unlock the value of digital assets, whether that be price or their capabilities, we do need to see safe and secure custodians in this space, especially for institutions. Their website is absolutely stunning, and they recently have revamped this, and I definitely encourage you to go check this out. They also have a New York State banking status, which took them a year to get, a year of hard labor, evidently for a very good reason. New York is one of the most expensive and difficult regulatory states to get a banking charter in, and although banking charters are equal, some are more equal than others. So getting a banking status in Wyoming is actually not exactly the same as one from New York. So there is a reason why they have stated New York. Now, on top of that as well, they're part of a smaller group of companies, and an elite small group, because there's not many companies that have managed to get a banking status before they start to trade. So as we move on, we'll also see that they're different in another aspect. Safer than cold storage. Now, from my very limited knowledge, I was like, how? Because we are taught in the crypto space that cold storage is the gold standard when it comes to custodying your own crypto, and I imagine it still is for us retail investors. However, for institutions, they want something more, and that something more comes in the form of a cryptographic key without the human touch. Well, the reason why this is really important and why it's even more secure than cold storage, because it removes human error. It removes an employee potentially doing a malicious act or simply having a mistake when transferring cryptos. So this is really exciting to see how they've created a comprehensive solution. The user interface also looks super stunning. Really key component when you are introducing high-tech technology and concepts and simplifying it in a user-friendly way. It's a true art form. Now, who is on the team? Well, the technology behind standard custody is built upon by Polysign. So Polysign is the parent company, and standard custody is a subsidiary of Polysign. Polysign, on their team, we have, of course, the well-renowned David Schwartz, the CTO and the chief cryptographer at Ripple. We also have Antonetti, who is the CCO and previously at Ripple Labs. Tim Keeney, that was a mouthful, vice chairman and retired vice chairman at BNY Mellon. A lot of these familiar names. And Arthur Brito. Wow, when we moon, I'm going to be Arthur Brito. The man, the myth, the legend, is the founder and president of Polysign. And the CEO of Polysign is Jack McDonald, who I'm going to show you who he is right about now. So if we head back over to standard custody, and we'll come back to the about us in just a second. Let's look at the team. So Jack McDonald is also the CEO of standard custody. Remember, Polysign, parent company, standard custody has got a lot of that family over here. So Jack McDonald is the CEO of standard custody as well. Antonetti, the board member, as we mentioned, she was previously at Ripple as the CCO, Chief Compliance Officer, and for quite some time. So Ripple never far away from all of this, never too far away. Who else do we have? Well, an individual who I was not familiar with, John Quirk. I hope I pronounced his name correctly. Sorry, John, if you're watching this. He definitely needs to update his LinkedIn photo. So whilst on John's profile, I saw that he was the managing director at JP Morgan Chase. Not for 10, but for 20 years. That's a life sentence for some people. However, he is still the present managing director at JP Morgan Chase and on the board at Standard Custody. What an individual. So when they do say that they have, and I believe they say it on their homepage at the bottom, if my little cursor wasn't in the way, there we are, the best in crypto and traditional finance, they truly can stand by that. And when we talk about JP Morgan, we hopefully remember this thing from The Big Short, where they didn't even get the meeting, but the two young guys in The Big Short, the Brownfield Fund, had to sit in the lobby for their meeting. Now I'd like to think that Ripple, Polysign, Standard Chartered, we've progressed a little bit beyond the waiting room, the lobby. On top of that as well, Standard Custody, their main mission, while I'm listening to an interview which I'm going to show you in just a moment, is to educate institutional investors. And the reason why they need to educate them is because if you don't understand something, you fear it. And you are not going to invest in something you don't understand and you fear. We're also going to talk about where Cowen, you probably heard about Cowen, and if you haven't, don't worry, we're going to break them down. It's going to be such a pivotal piece to that puzzle of making institutional investors feel at ease. So let's take a look at the first clip. And this whole idea about getting investors out of the space. Now, I for one sit on the fence with this when we hear about, the big banks, the institutions are driving fear in the market, they're pushing the price down, getting retail out before the big pump. I sit on the fence. But here, Jack McDonald, the CEO of both Standard Custody and Polysign, talks to how the drops are an opportunity for institutions, but not as you may assume?
Quickly and effortlessly. And so I think there's just been a realization. Obviously, there's been some big headlines, as you suggest, of some big corporates or asset managers wading into the space. That certainly has given some momentum behind the movement. There's some FOMO that's been created, and you've seen the big run-up, obviously, in Bitcoin to 60,000 and pull back. And so I think a number of different factors have contributed, and we are seeing, I think, a slow and steady increase of adoption. I think this pullback in the market, frankly, has been healthy because it's afforded a lot of institutions who are looking at entering the space a little bit of breathing room to assess the three factors that I mentioned before around education, regulation, and infrastructure, and to really think about how they could put together an investment process within a given organization, whether it's a hedge fund or a pension plan or an endowment or family office, what sort of assets they would invest in, how that would impact their operational flows, and what the target outcome would be.
So this is a fantastic interview, which I definitely recommend you go check out. DeFi Times. It's only been seen by 1,500 people. Really put that in perspective. And of course, granted, Standard Custody have really now started to come out and speak and get some press out there. However, I can't recommend watching this full interview in its entirety. So there we have it. He's talking about how the drop in price is an opportunity for institutions to have a look at this and actually have the talks, which many of us have had with ourselves, which is it too late to invest? So if you are on the party that institutions are pushing the market down, well, they're looking at an opportunity to get in. And if you sit on the fence like I do, and ironically the institutions are sitting on the fence and they're not yet in the space, when the market does drop, it's an opportunity for Standard Custody to have these conversations with these institutions about coming into the market. Now, when we talk about coming into the market, this is the biggest barrier to entry. And this is why I was saying we're going to look at Cowen in just a moment, and who Cowen are and how they play a pivotal role in making institutions feel safe in this space. Check out this second clip.
In their organization. And I can tell you, Jury, that the appetite to invest into digital assets is there. We're getting a lot of feedback, and this was one of our thesis and why we selected Cowen to lead our round, is that together with a known counterpart, a familiar face, if you will, for these institutions, it's much easier to envision investing in the space as opposed to a institution coming new to the digital asset industry and having to figure out how to set up an account at an exchange. It's a whole new sort of trading and operational flow, having to find a custodian, having to find different tax reporting, et cetera. What we bring in a partnership with Cowen essentially is a packaged offering that they can take to their clients to say, hey, you've already got a trading relationship with Cowen, trade this new asset class with us, and custody through a sub-custodian that we've invested in called Standard Custody that's regulated in New York, that's insured through a big policy that we have with Marsh & McLennan. And so we really check a lot of boxes that those institutions are used to having for their traditional assets, and we're replicating them and really replatforming them in the digital asset ecosystem.
And I have to apologize, it's Cowen, not Cohen. Nonetheless, I can't put it any better than Jack McDonald has right there. The whole idea is we want to reduce the barriers to entry in the sense that repackaging it in something that looks familiar, feels familiar, and sounds familiar, whether that is jumping through the unnecessary evil hoops of getting banking chartered licenses, insurance with recognizable names, or even a partnership with Cowen where they're already working with Cowen. So therefore, the introduction of, you want to invest in this space, you're going to need a custodian. So let us introduce you to our good old friend, Standard Custody. Oh, and don't worry about them. We trust them. This is also known, quick little breakdown of this concept of transfer of social capital. This idea that if I hold a good reputation with you, there's a halo effect. If you like me and I recommend a book, you automatically see that book in a positive light, because the halo effect is where this high social capital that I have with you passes on to this book, which you probably don't know much about, but because I speak highly of it, automatically those points that I've earned with you transferred to this book. This is why referrals and partnerships are so powerful, not just in cryptocurrency land, but in life in general. And to summarize this final clip here, what could Jack McDonald be talking about? XRP community, I know you're a bunch of savages. Let me know. What could he be speaking about? Am I far off with this?
The good news is, though, I think there's a realization that blockchain technology, distributed ledger technology is here to stay. And even if there's not a firm belief yet on the future of cryptocurrency, I think there's a growing realization around digital assets more broadly and the future tokenization and digitization of traditional assets. That's an area of focus for us on the settlement side. We're building a product called Polynet and doing some very large proof of concepts right now with some global asset managers as well as some global banks that support them, and getting firsthand opportunity to work with these big banks. And there's some really smart people there, and they'll be.
Yep, he just said Polynet, and safe to assume connection with RippleNet. I don't know. You let me know in the comments below. Nonetheless, to finish this beautiful journey of bringing standard custody, Polysign, and Cowen all together, a little bit of philosophy and a nice little reminder for every single one of you. You aren't what you drive. Financial independence is not displaying financial status. So don't get the two confused. And I really hope every single one of us has that front of mind, that as we go day by day, studying, reacting, reinvesting in this space, that we remind ourselves not to get caught up when we do sell at our desired price points, that we don't get caught up with trying to display our financial status, or at least even now your current situation, that you may be sitting on unrealized profits and you may feel a slight imposter syndrome around that. However, don't feel the need to shout to the world how wealthy you are in your portfolio or how wealthy you're going to be. Take this time now to realize that wealth comes from within, and it's all relative. So live your rich life starting from today. Nonetheless, family, thank you for investing your time, and I will see you savages in the next video. Ciao for now.